Well, hello and welcome to Morning Trade with Money Control. I'm Nandita Khemka and I'm here to help you navigate the day with actionable trading strategies, tell you about the stocks and sectors that will be in focus today, as well as get your queries answered by our expert on the show. So guys, keep commenting on our live feed and we'll take up your queries during the course of the show. But before we get our guests on board, let's see what the global cues are looking like this morning. Well, Wall Street skids for a fourth straight day ahead of the release of monthly US jobs report. Major indices are set to end the week with losses. Meanwhile, Asia is also in the red, with the Nikkei sliding over 2%. SGX Nifty, however, is hinting at a flat but positive open. European markets end lower after Bank of England implements a 75 basis point rate hike a day after similar action by the US Fed. The bank also notes that its projections for growth and inflation indicate a very challenging outlook for the UK economy. And on the show today, we'll be discussing why domestic investors are turning sellers despite the recent rally. And stocks in focus today are Heromoto Corp, Titan, Schneider Electric and Bluestar. Now, domestic investors have turned sellers over the last few sessions, even though FIIs have made a comeback. Let's discuss this trend in details with Kunj Bansal, who's from National Institute of Securities Market. Good morning, Kunj. Great to have you on the show. I want to begin by asking you that the Nifty has managed to hold above that 18,000 mark despite volatile global cues. My question to you is, are we poised to make new highs before we end the year?
It's always difficult to predict such things or even the direction of the market in the short term. In the medium to long term, we know that Indian economy is headed for growth, and obviously the market will follow the economic growth. In fact, despite lowering all the numbers and all, the world body IMF, International Monetary Fund, has projected a GDP growth, I think 6.8% or something for India, which is one of the highest in the comparable economies of the world. So if that GDP comes, we'll continue to grow. Coming back in the short term, let's keep in mind that we are already up about 7% from the recent lows of 16,800 Nifty that we were in the last week of September. So hardly in about 1 month or 1.5 months, we are up 7-8%. So for a short term, that's a decent movement, especially when global factors are not supporting. We saw how the US market fell yesterday after the Fed increased 75 basis point rate hike, which was in line. Despite that, market fell yesterday, day before yesterday, I'm sorry, and yesterday as well. So the global cues are not supporting you. Despite that, we are holding 7% up. So I don't think we should keep very high hopes in the market moving up in the short term. But if it moves up very well, the global inflows, which have again started on a positive note, are something that could take it higher if it does. In terms of not only the global markets, also in terms of macroeconomy, the Brent, the crude has started to inch up again. So that's again another negative for us. So that's where I would say that let's keep the subdued expectations after 7% hike. But yes, if global flows continue with a very high inflow, then we can move into higher trajectory.
Right. Talking about flows, there has been a trend reversal of sorts in the last few days. FIIs have been sellers for the most part of the years, but then they have made a comeback over the recent past. And now we are seeing the domestic investors turning sellers. Do you think it's just a minor bout of profit booking and it won't last for long?
Yeah, I think if we look at the domestic inflows into the institutions, especially into the mutual funds by way of SIPs, as well as the direct inflows into the equity funds, and even the activities of insurance companies and others, they have been on a very broad basis. We have seen continuous inflows, and as a result, the domestic institutions have been net buyers. It always happens, and it's a very good strategy that whenever there is a sudden short-term demand from FIIs which come in higher numbers in terms of rupees or in terms of dollars, it's better that you do take call on a shorter-term trading part of the portfolio and sell it, some part of it, to them. And then again, so the same domestics, let's keep in mind, turns buyer when global institutions turn sellers also. So if you have to every time keep buying when they sell, then you need cash also. So I think it's more of a short-term trading strategy, and which is a very wise strategy that domestic inflows or domestic institutions and even domestic non-institution, that is individuals, are adopting. I think on a longer term, they continue to hold large part of their equity portfolios for long term, which continues to as a view, which continues to remain positive.
Right. Shifting focus to earnings, we are in the last leg of the earnings season, and private banks have reported pretty good numbers, and there's been an uptick in credit offtake as well. The big one, SBI, from the PSU banking space, will be reporting its numbers tomorrow. What are your expectations from there? Also, what's looking better now, private banks vis-a-vis PSU banks?
So yes, one in general, market has done well. Two, within that, the quarterly numbers for the September quarter have largely been in line with expectations. Sales growth, top line have been muted, and bottom line has been negative because of the margin pressure across the industry. I am talking of. Coming to banking, yes, banking has given very good number. You talked of credit growth, which is close to 18%, which is a multi-year high. So that's a very positive sign. Not only private sector banks which have announced the numbers till now have given good numbers. We have seen the stock price movement of public sector banks also continuously going up. So the expectation is that whatever numbers have come in well, and whatever numbers will come in well. For SBI, I don't have the ready numbers, but I think if we look at the trend, the numbers should be in line with the market expectations. In fact, if at all, marginally positive. In terms of valuation, the gap between private sector banks and public sector banks has been reducing because public sector banks have been doing very well. Now, buying wise, yes, it depends. What call does one take?
Ask you a question on Nykaa. Now, we all know that it has slipped below its issue price, and the anchor lock-in will also be ending later this month. But earnings were pretty good. It saw a threefold jump in profits versus last year. What are your thoughts on this one, especially since it's the only profitable one amongst the listed new age companies? There's been some technical issues, so we will get back to Kunj in just a bit. But let's now shift focus and bring on board Gaurav Bissa of Incred Capital, who's joining us this morning to talk about the market setup as well as the stocks that will be in focus. Gaurav, it was a fairly volatile session yesterday, but we managed to keep our head above that 18,000 level. And this morning also, SGX Nifty is off lows, and we may start in the positive territory. How does the setup look like for the rest of the day?
Good morning. No, you pointed it right. 18,000 is going to be the key level to watch out for. And we are seeing some decent writing happening in 18,000 put options as well. So the band of 17,950, 18,000 is going to be the key support area. And if that is sustained, we can head towards the level of 18,200, 220. And once it gives a close up of 18,220, the roads will open for 18,400 and above level. So the structure remains positive. I would be more than happy if there's a fall towards the level of 18,000, 18,050, where one can start building positions, keep a 100 point stop loss, and play for 200, 300 points target. If we do open flattish note and if we are inching a little higher, though we may head towards 18,200 today, but I would not then be interested in that and trade that strongly because the supports will be deeper. But nevertheless, the structure will still remain positive. The key level to watch out for is going to be Bank Nifty. Once it gives a close above 41,820, I'm talking about futures, it can move another 1,000 points from those levels. There's a major hurdle at those levels. Once that is crossed and sustained on a closing basis, there will be a big breakout that we can see, and 1,000 point, even 1,500 points would be on the card. So that is going to be the key driving factor for Nifty index going forward.
Right, Gaurav, just hang on. I'll come back to you. Just wanted to get in my last question with Kunj, and it was on Nykaa. Kunj, Nykaa has slipped below its issue price, and the anchor lock-in also ends later this month. But given the fact that it reported a threefold jump in its profit for the second quarter compared to last year, and the fact that it's the only profitable one amongst the listed new age companies, what are your thoughts on this one? Do you think it's a good long-term play?
Very difficult for me to take a call. In 2021, most of these new age companies came out with IPO when there was a lot of hype. And rightly so, you have to do right things at the right time. Even loss-making companies came in with IPO, had huge oversubscription, had good anchor books, and retail also participating in. In some cases, initially stock prices went up and then came down. For me, so nothing particular, but my approach is to that there are so many. We are in listed space. We are not in private equity space or venture funding or unlisted investing. So once we are in listed space, there are so many other opportunities which have consistent track record of profit making, a reasonably good predictability in terms of future profitability next 2, 3, 5 years, and valuations one which has to take a call. So when so many other opportunities are available, I wouldn't want to bet on the companies on which predictability for me is lower. The stock might do well, I don't know, but that's my approach. So that's where it doesn't fit in.
All right. Well, with that, thanks a lot for joining us this morning, Kunj, and appreciate your taking out time for us. Coming back to Gaurav, let's shift focus to specific stocks. Heromoto, well, that reported a 10% decline in its profit. We saw some margin pressure as well for the two-wheeler maker. But remember, the company saw good festive sales, even though margins have come under pressure in the second quarter. Over the last few days, it has been fairly volatile, if I look at the charts. For going forward, do you expect pressure to continue for this stock?
I would not say that the pressure will continue. What I will say is it will continue to witness underperformance. So if you look at TVS or if you look at Eicher, we have seen strong outperformance coming in two-wheeler space. But Hero Motor for one has been trading in a range and it has been underperforming. That underperformance will continue. For me, it will be a lucrative buy towards level of 2,400, 2,420. It's stuck in the range where supports are placed at, as I mentioned, 2,400 and the resistances are placed at levels of 2,870. So it's stuck in the range. I would avoid it this point in time, but I would not say it's going to be under intense pressure. It's going to be probably more of a time correction than price correction.
Time correction rather than price correction for Hero MotoCorp. Moving on to Titan, it's slated to report its second quarter earnings today, and Street is expecting 11% growth in its profit on a standalone basis. Over the last month, the stock has seen gains to the tune of 20%. If the numbers come in line with expectations, do you expect more upside on this counter?
Well, yes, if you look at the overall structure, it is on the cusp of a very strong breakout on daily charts, and it witnessed some amount of profit booking at breakout levels only. But if it will sustain a little bit high levels, then I think a very strong upside can be seen. So the key levels to watch out for are going to be probably 2790, 2800. If it is sustained among those levels, you can expect a 10 to 15% upside in Titan. Well,
sparkling 10 to 15% upside on Titan is what Gaurav is expecting on Titan. So moving on to Schneider Electric. This stock is down 27% on a YTD basis. The company has reported a profit vis-a-vis a loss in the same period last year. Schneider Electric, do you think now we can see some upside given the fact that the earnings have been pretty good?
Well, it has been a very strong name, and we have seen a very strong upside. But it's more of a small consolidation. It's in a continuation pattern. But if I were to buy, keeping 170 as a stop loss, that can be for risky traders. Once it sustains at levels of 195, I think then there will be fresh breakouts and we can talk about much higher levels. But at this stage, one can buy, but there will be some amount of risk. Right.
Moving on to Bluestar. The company has reported its earnings. It's seen a 30% jump in profit despite high input costs. If you look at the stock, it has been giving pretty steady returns over the last 6 months or on a YTD basis. What are your expectations from this one, Gaurav?
It gave a small breakout, but the breakout levels were 1160, 1170, and from there we have seen some amount of upside already. So I would not be too keen to buy at this point in time. Probably we can see 3-4% upside, but the risk reward, the setup is not that lucrative. I would rather wait for some more confirmation to get into the name.
Next one on my list is a recent listing, Ethos. Well, this is up 20% from since its listing, even though it listed at a discount. It has clocked a 5-fold jump in its profit for the second quarter. Given the fact that the demand remains robust and there are quite a few tailwinds for this company, do you see, what do you expect from this counter?
So if you look at Ethos, the structure is not bad, but it's trading in a channel, falling channel pattern. And I would rather wait for a breakout to happen. Once it gives a close of 1,000, it will give a good breakout and you can play for another 8-10% upside. Till the time it does not happen, I would still wait at the breakout area, but I would not like to preempt. It's seen multiple failures from those levels. So I would not preempt the breakout, but once it gives a breakout about 1,000, I think that is time when one can nibble into the stock.
Well, let's now get in some viewer queries that we've been getting this morning. The first one comes in from Vignesh Salian, and he has queries on Shoppers Stop and TVS Motors. Shoppers Stop has given fairly good returns over the last 5 days. It's up somewhere around 7% or so. What would you suggest he does on these counters, Gaurav?
So if he has already bought, one can ride. We have seen a very strong uptrend. So one can definitely keep a trailing stop loss and buy. It's seen a breakout as well. But if you want to buy fresh, I would not recommend that. The breakout happened at 670 area. As far as trailing stop loss is concerned, one can keep a trailing stop loss of 695 and ride the trend. That is the only way or other to play about it.
The other stock that he had a query on was TVS Motor.
TVS, as I said, it's been in a very strong uptrend and it has been a very clear outperformer as such. We are seeing some amount of consolidation, which is fine. It's been respecting its 55 EMA quite strongly. Again, if somebody wants to buy fresh, I would not suggest that. But if you're talking about trailing stop losses, keep a trailing stop loss 1,060 and hold on.
Right, the next query is coming in from Vinayak Shenoy, and he has one on Arvind. The stock has been fairly upbeat, but over the last 5 days, we saw losses to the tune of 2% or so. What do you expect? What do you suggest he does on this one?
It's trading below 55 EMA on daily charts, even 89 EMA on daily charts. Even 200 EMA on daily chart. So it's very short term. The structure is weak. It's trading below all the major moving averages. So if somebody has, I would suggest exit. If somebody wants to buy fresh, I would not suggest buying.
Right. Exit is the call on this one. Moving on to the next query. It's coming in from Saurabh Shirsagar, and he owns Hinduja Global, which he bought at 1220 rupees a share. He wants to know what should he do with this one.
So it's again a similar structure where we are seeing hurdles. It's trading below all the major moving averages. So if somebody wants to keep a sort of risk structure, then keep a stop loss of 1110 and hold on. But the structure is weakening. It witnessed bearish divergence. It has seen correction happening. So it will face some pressure at higher levels, but it's not having a very bad structure as such. So one can keep a stop loss of 1110.
Right. The next query is coming in from Sumendra Sarkar, and he wants your short-term and long-term view on Ease My Trip.
Limited history. I would not be able to give a long-term view. Recently listed, not very recent, but the chart history is quite limited. But whatever history is available, it's trading in a decent rising channel sort of. One can keep a stop loss of 360. Below that, the things will become a little weaker. The trend will pick up once it gives a weekly close above 430. Then we can see a very strong upside sort of. It's seen a failed breakout. So the structure is not bad as such. You will have to give some more time, but on short term, it will not do nothing. Once it gives a close above 420, we can see at least 1 year upside and very strong upside at that.
Right. I want to just get in your view on the bank Nifty, given the fact that SBI is slated to come out with its numbers tomorrow. Where do you expect the bank Nifty to trade today?
As I said, for me, Bank Nifty, the trigger will happen once it gives a close above levels of 41,820 on the future side. But if somebody wants to play intraday, then I think the right level to watch or the more decent level to buy would be anything around 41,200. Keep a stop loss of 41,000, the low that we made yesterday. And you play for 41,500, 41,600 kind of levels. But the more interesting levels, the more clear structure would be a close above 41,820.
Right. Let's now shift focus to the stock recommendations that you have for our viewers this morning. Could you list it out for us?
Yeah. So the first recommendation would be buy on Ujjivan Small Finance. It's a very recently listed in a 2-year history, but we're giving a very strong breakout. Volume participation is very wonderful. It's closed at the levels above the price equilibrium level around 24. And we are seeing good amount of volume participation happening as well. It can move towards the level of 32. One can keep a stop loss of 23. Arman Finance is another name that is looking good. Yesterday it had a very strong session, very strong relative strength. Keep a stop loss of 1510, buy for targets of 1650.
Right. Arman Financial and Ujjivan Small Finance Bank are the two recommendations that Gaurav has made for our viewers this morning. With that, thanks a lot for joining in this morning, Gaurav. Look forward to having you on the show once again later sometime. Well, with that, we've come to an end on this edition of Morning Trade, but don't go anywhere because coming up next is the markets with Santo and CJ.